Hey, what's up, everybody? It's Chris with AZ Flip Guys. I had a meeting last night with my family and a mutual fund guy, a financial advisor, someone who's supposed to help you grow your money and create wealth so you can retire one day. Well, he pulled out a form, this form actually, and this is what the stock market people do to try to sway everybody to their side of the aisle, and they do a good job. Very little money is actually invested in real estate compared to the stock market, and these are the kind of lies that they like to show people. Now, it's not necessarily a lie, but it's not the whole truth. So if you look here, this is a 40-year period, the S&P versus real estate. This is if you invested $50,000, what would it be worth after the end of 4 years or 40 years? So on this chart, based on simple returns, the stock market does do better. You can see there, real estate averaged 4.8%, stock market averaged 8.1% over the years. One thing I'd like to point out, real estate never had these are 5 or 10 year periods. Real estate never had a down period in those. Look at that though, negative 22%. That hurts. That's over a 10-year period. So over 10 years, you're down 22%. That's brutal. So this is what they try to say, but I'm going to show you the truth because we're going to do some real math. Real estate has a lot of advantages, right? Well, the first advantage is leverage. So I'm going to show you my chart. So we took that 50,000, but we didn't just buy real estate cash. We used the power of leverage. So we used that 50,000 to buy a $250,000 property. So now you can see when you leverage based straight off the exact same numbers they were doing, your property is now worth $1.75 million, right? They were saying back here, it's only worth 350,000. So when you leverage, using the power of leverage, you can see big difference. 1.7, spoiler, 1.7 million. But then that's only one of the benefits of real estate. So as a real estate investor, what we do is the first thing that we do is we buy under market value. Even if the property is turnkey, we can still find properties at 80 cents on the dollar. When they need work, we can get them for much less, 50, 40 cents on the dollar, and then we make those improvements. But assuming we just bought properties at 20% below market and we leveraged at 20%, and then add cash flow to the mix, because that's one thing that the stock market doesn't give you. It doesn't give you cash flow. It might go up in value, but real estate goes up in value and it creates cash flow. So in this scenario, we're going to assume we can buy $312,000 worth of real estate with our $50,000 down, because we're still buying it for $250,000, but it's worth $312,000. We are leveraging with our $50,000, and we're adding cash flow. Now, I only did 5% a year, which is very low, moderate. Lots of good investors can get a much higher than a 5% cash flow return, but I just wanted to show you for the numbers what the huge difference is. So you can see, when you do this, you buy $312,000 worth of properties, you leverage them. At the end, look at that, guys, over $7 million of real estate by using leverage, collecting cash flow, reinvesting. It's not even close. So I know your mutual fund guy is going to try to preach you one thing. I know that they tell you a lot of things. They like to keep America dumb. They like to keep America uneducated. But real estate is by and far the best investment out there. If you want to learn more, PM me, hit me up. We have lots of deals. We have lots of notes for sale. We have lots of chances to get into this business at a low entry level. So hit me up on Facebook or Instagram at AZ Flip Guys. And this is Cashflow Chris signing off.